speaking to some of my friends in freelancing industry. Now they're doing superbly well when it comes to their revenues. They are getting good billing revenues, they are getting new customers, and they are innovating regularly when it comes to their deliverables to their customers. But as you know, this is the time where you have to start filing your returns, income tax returns. What really happens is that by this time of the year, they struggle to give those records to their accountants who are supposed to file their returns. In this video, I'm going to tell you those top 5 mistakes that most of the times freelancers do during the year, which makes their return filing extremely difficult, and also a lot of misouts happen. Now, before I take you to those 5 mistakes, how about hitting that like and subscribe button so that we know that you're appreciating our videos and also liking the content that we are making for you guys here. So let's understand the first mistake. The first mistake that I saw with most of them is that they do not keep a record of their expenses. Now the income, because it's mostly coming in their bank accounts, you really can't skip it because it's a money coming in your bank account. But when it comes to expenses, a lot of times expenses could happen through cash, it could happen through credit card, or it could also happen with other methods like Google Pay and Paytm. So it's very difficult to keep a track of all the expenses that you've incurred, and more difficult is to keep the receipts of those expenses. Now let's say you took your clients to dinner last Saturday, but did you keep that dinner receipt or the bill or the invoice that the restaurant gave you safe? Because this is something which you incurred on your customer, and this is something that you can actually claim as a deduction in your return calculation or your income tax calculation. But did you bother to keep a track of that? So the first thing that you have to start doing is keep a track of the expenses you are doing for your company or your freelancing work. Now, the first thing that you need to understand is your expenses on your freelancing work and the expenses you are doing on your personal expenses or your personal life is very different. And you have to start differentiating between the two. If you're still figuring out how to sort this out, you can check out this video where we have explained how you can keep a track of your income and expenses in a different way so that by this time, you know what is on what account. So first thing that you have to start doing is make a file, make an Excel sheet, or buy an accounting software where you can start recording all the expenses you are doing for your business and the expenses that you're doing for your daily life or your own personal pleasure. So keep a track of all the expenses that you're doing, and do not forget to keep a record of these receipts. Now here is a great idea for you. A lot of these receipts, a lot of these expenses that you do for your customers are also reimbursable. So go ahead, check your contract. See what are the expenses that you can claim as a reimbursement from your customer. Not only will this bring down your expenses, this will also give you a scope to increase your revenue. Now for me to tell you the second mistake, where is your office? Are you working from your home? Are you working from an office? Are you working from an office which is owned by someone else in your family, like maybe your father, mother, sister, brother? Have you worked out a rent agreement? You'd be surprised to know that even if you're working from an office or home which belongs to someone else, you can claim rent on it. Yes, you can. And this rent that you pay to your family member can be claimed as a deduction in your income tax calculation. But before you go ahead and claim this deduction, remember that you have to make a legal agreement with, the family member or the person whose office or house you are using, and they have to show this as their income in their income tax returns. So it is a 360 degree that you have to follow. These are the 3 steps you have to follow. First of all, figure out who owns the property which you are using as your office, home, office, whatsoever. Second, make a rent agreement with them. Third, start paying them a monthly rental and ensure that they show that this as their income in their income tax calculation. Now, don't make the mistake of showing this deduction in your income tax return and they don't show it in their income tax returns as income, because then that will become a big regulation mistake and you can be caught by the income tax authorities for making a disaster in your returns. So let's hope you've taken a moment to absorb these 2 points, because yes, I know it can come as a great surprise to many of you. I gave this suggestion to some of my customers who are in freelancing industry and also some of my friends, and they really had a moment because they never realized that they can actually claim the rent in their income tax calculation, a house that they are using which belongs to their parents or their husband for that matter, and it can be claimed as a deduction in their income tax calculation. So I hope you know that every deduction that you claim in your income tax return will reduce your income tax liability. Now, this is not only applicable in India, it is applicable worldwide. So the regulations or the things which are allowed may vary, but as per my research, it's allowed in most of the countries that at least I read about. Now, this third is going to be a little more surprising to you again. Have you bought a laptop, a camera, or a software for your freelancing work recently? And have you bought that in 1920 or 2021? Did you know that this expenditure which you did on the laptop, on your software, or even on the mobile phone can be claimed as a deduction, as depreciation in your income tax calculation? So all this that you are calculating, when you are calculating your revenue from freelancing work, it has to be shown under income from business and profession, especially when it comes to India. So that means this is an income that you're making from your business. So when you're buying that laptop, so let's say you bought a laptop of 1 lakh rupee. Now this can be claimed as a depreciation when you're calculating your business income. The depreciation rate would vary based on what the product is. So at times, let's say a 1 lakh rupee can be claimed a depreciation of 30%. Mostly the depreciation would vary anywhere between 20 to 40%. So that means that laptop of 1 lakh rupee that you've just bought can be claimed as depreciation over a period of 3 to 4 years, and a straight deduction in your business income calculation for the calculation of the tax liabilities. So there you go, another savings for you. Now the fourth, and you will be like, oh, I never thought about it. It is as simple and obvious, but at times you need a friend to tell you what the obvious is. So all the expenses that you did on, your client maintenance. So for example, your phone bills, the electricity bills, your salary that you are paying to your employees, the conveyance. So you've taken a taxi from one place to other, and or let's say you filled petrol in your car, which has taken you from your office to your client's office. So everything that helps you conduct that business or everything that helps you get that revenue can be claimed as an expense. But here is a word of caution for you. So let's take the example of phone bill. Now this phone bill is not only used for your office work, it is also used for your personal life. So don't go ahead and claim the full expense as your business expense. Make a decent segregation between your personal and your business expense, and so let's say you may say, okay, 50% of my phone bill is for business and 50% is for my personal life. So there you go. If your phone bill is of 5,000 rupees, 2.5 and 2.5 is what you need to divide between your personal expense and business expense. So the business expense only will be used to calculate your total income calculation or your income calculation for taxation purposes. So there could be a list of expenses that you can claim. Here are some of the top examples. Your phone bills, your internet bills, your electricity bills, the salary that you're paying to your team, your antivirus software expenses, any form of software renewal that you pay every year or a monthly expense or conveyance bill, and also entertainment bill. So when it comes to entertainment, if you've taken your client to dinner, yes, it can be claimed as an expense in your business. But remember, it may be that you have to prove that your client was there. So it's a good idea to keep a record of it. And don't forget to keep a photocopy of these restaurant bills, because in my experience, after a point of time, all these restaurant bills just become blank. So keep a Xerox of it so that when the records are wanted by the authorities, you have a decent looking restaurant bill where the ink has not vanished and it has not become completely white. So this is something that you need to make a note of, and always keep an account as to what was the total expense and how you've divided between your personal and business expense. Yes, the authorities have the right of claiming details from you at any point of time. Mostly up to 3 to 4 years, they can ask you details about your income tax calculation. Now, since you have noted the top 4 mistakes that most of the freelancers do, and especially the ones who do not have a full-time accountant with them. This is the fifth point to note, and again, this is very obvious, but this is also a little technical. So I hope you do know that every time a revenue is paid to you, your client is supposed to deduct a tax deduction or source or TDS on it. So let's say you have a revenue of 10,000 rupees. Now there is a slab to the TDS calculation, and there is a minimum amount of billing that is needed, which would vary from services to services. But let's say you have a retainership model where you get 2 lakh rupee of monthly retainership from your customer. Now this means that every month you will be getting 2 lakh rupees. So the customer may deduct anywhere between 1 to 10% on this revenue. So let's say again they're deducting 10%. So what you're getting in your bank account is 1,80,000 rupees. Now you may say, okay, this is my revenue and the balance 10% is my expenses. But no. What this basically means that the customer has deducted 20,000 rupees from you and paid to the government on your behalf in case you do not file an income tax return. So first of all, your customer must have your PAN number so that when they deduct that amount, they deposit in on behalf of your PAN number, which is your income tax identity. Now, before you are about to file your income tax returns, or before you are about to calculate the annual revenue for the year or see how much money you made during the year, go ahead and check the TDS paid on your behalf by your clients to the government. In India, you can check through this form called 26AS. I will leave the link in the description below. It's extremely easy to do it. All you need is your PAN number and the basic details. So once you check that, you will be able to figure out as to how much money on your behalf your clients have already paid to the government. Now this is not an expense. This is basically your tax which the clients or customers have already paid to the government on your behalf. And most of the times, this TDS on a total basis will be much more than the income tax or taxation that you are supposed to pay to your government. So this means you can always claim this as a refund from the government, and it's very easy while you are filing your income tax return. You can always shoot a mail to your chartered accountant or your accountant or the guy who's filing your returns to send you this form 26AS, or you can go and download it for yourself to see how much TDS has already been deposited on your behalf. Now these were the 5 mistakes that most of the freelancers land up doing, and I know all of these are so obvious, but yes, you needed someone to state the obvious to you. Now, before you sign off, don't forget to note this last free suggestion. Now, there is something called advance tax. What does this mean? This means that whatever income tax you are expected to pay or you think you will land up paying by the end of the year, if you're calculating your income tax under business and profession, you need to submit an advance tax to the government every quarter. So there is a quarter limit for your advance tax submission. So if you think your income tax liability is going to be more than 10,000, do not forget to submit this advance tax to the government every quarter. Now, if you forget to submit this, what you will be paying is interest on your tax liability, and why to pay an extra expense on the tax which you're already supposed to pay. But while you're calculating your advance tax liability, do note how much TDS has already been submitted by your clients to the government. If the TDS is already submitted, then you need not worry because the taxation has already gone to the government on your behalf. So these are some of the things that you should make a note of, and don't forget to speak to your accountant about it, or your chartered accountant, or whosoever is doing your income tax filing. If you're still struggling how to use these 5 bonus points, do write a comment here or send us an email. I will leave our email ID in the description below so that we can try our best to answer your queries. And before I sign off, yes, I am waiting to hear from you guys and also looking forward to your like on our videos, because yes, it does encourage us to make more and more better content. So see you guys in the next video, and I hope these videos are helping a lot. See ya.